Hello everyone. Let's discuss about the yesterday's RBI monetary policy and their interest rate decision in detail. So it will help us to understand how much impact that this will cause to our Indian bank. In addition, we can discuss about the pre-market stuff for 11th August 2023. As we all know now, yesterday morning 10 a.m. RBI has decided to keep the main interest rate same at 6.5%, which officially they call that as repo rate. I mean, this is the rate at which banks borrow money from RBI and then they lend that to industry and people like us with the additional margin. So, keeping the repo rate same is good for both individual and industry, and it is in line with market expectation. Then you may ask why market fell yesterday, especially the banks, after the RBI's announcement. To answer that, even on my last pre-market video, I mentioned I expect RBI governor to speak hawkishly about the food inflation and El Nino's monsoon effect. And to some extent, exactly he did the same. I mean, if required, please pause and have a look. It's a very interesting chart. This is how the whole country's average potato, onion and tomato price changed in this year so far. From this, for the first 4 months, there was deflation in the food price, but the last 3 months it's skyrocketing, especially tomato, which increased 235% in the last month alone. Here, there is no clear visible reversal for the food price increase, so he said he is worried about food rising prices and he wants to control that. So, instead of increasing the interest rate, here RBI did something new. Temporarily, they want to remove over 1 lakh crore rupees from the banking system. Thus, they asked the banks to increase their CRR, cash reserve ratio, the amount of money that banks need to keep aside as a safety measure. I mean, at present, the official Indian bank CRR requirement is 4.5%. So, from that as a base, they asked the banks to hold an incremental cash reserve ratio of 10%, which they had between May 19 and July 28 with effect from August 26. I mean, for example, let's say if HDFC Bank showed the RBI that they had the CRR of 5% between May 19th and July 28th period, then they have to increase now to 5.5%. This, for HDFC Bank alone, that 0.5% increase might cost near 30 to 40,000 crore rupees of loan. So, this rule for the bigger banks like HDFC, SBI, ICICI and Axis Bank will cost approximately 100 to 150 crore rupees every month. I mean, RBI said this measure is temporary and then they will review again on September 8th. So, till the time the cost for bigger banks, every month 100 to 150 crore rupees reduction in their profit. If this rule extends for a year, then this will eat up the profit to the extent of 2000 crore rupees. Here, if RBI raises the interest rate instead of this new rule, it means then banks can easily transfer that interest rate increase to customer, but here they can't. Anyway, RBI said this move is expected to make borrowing slightly more expensive in the short term, so they can control the food inflation and they don't want to burden the people by increasing the interest rate. So that's the reason when they announced this, all the banks comes under huge pressure and thus the Nifty. As you see, at 10 a.m. when they announced, immediately Nifty dropped by over 100 points and took support at 19,500 and recovered some. Then sector-wise, except metal and power, all other ended in the red with FMCG and PSU Bank down nearly 1% each, while capital goods and healthcare down 0.5% each. And the advanced return ratio was 0.9. About institution, surprisingly both FII and DII were net buyers. FII net bought for approximately 330 crore rupees and DII net bought for over 700 crore rupees. Then coming to US, before their market opening, US Bureau of Labor Statistics released the July month consumer inflation data and it came as 3.2% against expectation of 3.3%, but it is slightly higher compared to previous month 3%. I mean, nobody expects less than 3% since we know crude oil increased significantly in July and August, so the expectation itself 3.3% only. Now, because of this good number, in the first hour of trading, all the three major index advanced to more than 1% as everyone thinks that now Fed would stop further increasing and start cutting the interest rates early next year. But that positivity started to fade away in the late first half itself, then it bounced between positive and negative region for much of the afternoon. Basically, market given up as investors worried about the US economy long-term prospects and whether stocks had further room to increase. Anyway, in the end, all ended positive to flat. Dow Jones increased by 0.15%, S&P 500 very marginally up by 0.03% and Nasdaq increased by 0.12%. US VIX almost the same as day before yesterday, less than 16. However, oil price finally dropped 1.5% and that's too because of India. I mean, for July month, market expected and India bought the oil of 4.83 million barrels per day. Now, as per our government report, July's demand was just 4.7 million barrels daily. I mean, oil companies bought the extra oil on the basis of yearly demand to increase 1,90,000 barrels per day, which was in June, but the actual demand increase in July was just 84,000 barrels daily. I mean, it feels good because of India global oil prices dropping. At the time of this video, WTI crude oil was trading near $83 per barrel and Brent crude oil was trading at $86.5 per barrel. About Indian ADR, ICICI and HDFC Bank closed in line with Indian market, as in both places it dropped 0.4 to 1%. About IT stocks in India, it closed negative, whereas in US it turned positive. In case of GIFT Nifty at 3 am Indian Standard Time, I don't know why it closed negative at 19,554 level, which means it's showing possible 50 to 60 points gap down opening. As I said, banks were not that negative, IT stocks looks positive and even Reliance GDR it increased over 2%, so there is no reason that I can think for GIFT Nifty to be negative. Anyway, it is what it is. So that's what happened in the global market. Now let's see the India specific information. First, about the quarterly results, I like to highlight three companies: Hero MotoCorp, LIC and SAIL. Hero MotoCorp revenue increased 4% and their profit increased 32%. If required, please pause and have a look. Both of them didn't beat analyst estimation, only EBIT margin beats. Then in case of LIC, both revenue and profit beats the estimation comfortably. Finally, about SAIL, their profit down 74%, but analysts expected a loss rather than profit. So both SAIL and LIC results looks positive, whereas Hero MotoCorp results not. Second, about HCL, they won a mega contract of $2.1 billion from Verizon Communication to manage their business customers. For those who don't know, Verizon Communication is the biggest US telecom operator by subscriber. So I consider this as positive. Finally, in US, Dr. Reddy's unveils the generic anti-diabetic drug. This I consider as positive since this will increase the company's revenue. As a summary, global momentum is okay. I mean, both Dow Jones and S&P 500 closed marginally positive, but despite IT stocks and banks ADR looks okay, for some reason GIFT Nifty indicating the gap down opening of over 60 points. However, there is one huge positive. Yesterday, despite negative close in Indian market, both FII and DIA were net buyers. Then about the things to look out: ONGC, Nykaa, Apollo Hospital, Glenmark Pharma, SpiceJet, Hindustan Aeronautics, NMDC, Power Finance and Sun TV are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, during the market hours, first at 11:30 am UK's GDP data, then in the afternoon various European individual countries such as France and Spain's CPI data is due. Finally, in the aftermarket hours, various US consumer sentiment data and wholesale inflation PPI data are due. Coming to technical, yesterday Nifty formed a small bearish inside bar candle with short upper and lower shadow. So now the previous day candle is the breakout point. I mean, on the top it's 19,645 and in the bottom it's 19,465. And the critical support is at 19,500, which Nifty has defended for the 5 consecutive sessions. Then there is an additional support around 19,450 to 19,440. Technically, at present, the momentum indicators shows a divergent signal on both hourly and daily chart. Thus, possibly we might see more consolidation in the short term. Just for info, at present the global cues are neutral, but any deterioration may add pressure. Now for bullish scenario, no change, a decisive move above the resistance 19,650 to 19,700 is required. Then that will lead to a sharp up move targeting the 20,000 mark. If Nifty falls below 19,500, may result in slipping to 19,400 to 19,375. If it breaks those zones, then selling pressure is likely to accelerate with a short-term target of 19,100. As a conclusion, Nifty seems to be at a crucial juncture where both buyers and sellers are lacking conviction. Thus, the trend seems neutral to negative. However, there are underlying signs of potential bullishness if certain resistance levels are broken. Then, in case of Bank Nifty, it has decisively closed below the 40-day moving average. Thus, it forms a bearish candlestick pattern with a long upper shadow. At present, both daily and hourly momentum indicators show a negative crossover, which is a sell signal, and all are signaling weakness. Given the negative crossover in momentum indicators and the closing below the 40-day moving average, which implies there is a strong indication of further downside. If Bank Nifty breaks below the support levels at 44,500 to 44,400, this could leading to a potential target of 44,000. Then for positive scenario, to regain bullish momentum, Bank Nifty needs to break through resistance at 45,000 and more decisively at 45,150. This scenario seems less likely due to this new RBI induced selling pressure, but surpassing these levels could change the trajectory towards the upside. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.